Welcome. In this video, when will ZBCN coin stop falling? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Upon careful examination of the chart, it is clearly observed that the current price movement is confined within a well-defined descending channel structure. This formation is a widely recognized and frequently encountered price pattern in technical analysis. Typically forming within downtrends, these channels indicate that the price continues its downward trajectory within certain boundaries, consistently respecting both the upper and lower bands. At the moment, the price is moving toward the lower boundary of this channel, which, just like in previous instances, could serve as a potential area for pause or reversal. Descending channels are characterized by lower highs and lower lows occurring between two parallel trend lines. The upper line acts as a dynamic resistance, while the lower line serves as a dynamic but gradually strengthening support level. Historically, this lower support line may have halted several sharp price drops, thus creating a foundational base. In this respect, the lower band of the channel should not only be seen as a trend line but also as a psychological threshold where buyers tend to re-enter the market. The current downward movement toward this lower band may suggest continued bearish pressure on the surface. However, it could also imply deeper underlying dynamics. Particularly, the concept of momentum weakening, which is often seen in descending channels, suggests that each successive low is not as forceful as the previous one. This indicates that selling pressure is beginning to diminish, and a potential reversal might be in the making. At this stage, the most critical aspect for investors to observe is the price's reaction upon reaching this lower band. The behavior of the price at this zone can offer crucial clues as to whether the movement is merely a short-term bounce or the beginning of a medium-term reversal. When price hits the lower boundary, it typically either finds support and bounces upward or breaks through and accelerates further down. In most cases, however, such lower boundaries serve as strong support during initial touches and lead to a temporary stabilization or upward bounce. One of the most frequently observed scenarios within descending channels is when price reacts off the lower band and rises toward the channel's midpoint. This middle line acts as both a resistance level and a pivot area in terms of trend direction. If the price, after bouncing from the lower band, manages to break through this midpoint, it often gains the potential to reach the upper boundary. From this perspective, the current approach toward the lower band indicates that a technically significant breakout or reversal may be approaching. It's also worth noting that despite the bearish technical outlook, the price's consistent respect for the channel boundaries confirms the validity and reliability of this pattern. As long as the channel remains intact, any approach to the lower band can be seen by investors as a potential buying opportunity. It should be remembered that technical analysis is a game of probabilities, and while the lower band of a descending channel is often a reactive area, it doesn't guarantee outcomes. For this reason, investors should closely observe every new candlestick, the behavior of the formation, and signals from other indicators as price approaches this area. If price makes a strong upward move from this level accompanied by increasing volume, it can then be considered the beginning of an upward move within the channel. In light of all these assessments, the price currently approaching the lower boundary of the descending channel may be setting the stage for a potential reversal in the market. As in past instances, this region could once again attract buyers, trigger upward reactions in price, and lead to short-term recoveries in market structure. Therefore, observing how this critical level behaves in the upcoming sessions will be crucial not only for short-term trades but also for medium and long-term positions. But we cannot base our analysis solely on the channel. Let's also look at other metrics. Stay tuned. Upon careful analysis of the chart, it becomes evident that a previously well-established and steadily progressing upward trend line had been in place. This trend line indicated a long-term upward price movement and showed that buyers had been dominant in the market. Throughout this trend, the price consistently responded to this support line with upward moves, forming higher lows and higher highs, which built a healthy bullish structure. This pattern was one of the core dynamics reinforcing market participants' confidence and increasing the volume of long positions. However, in the current situation, this long-term uptrend line has been broken to the downside. This break is not only a technical event but also represents a psychological threshold. The line that had previously acted as a strong support has now turned into what investors consider a broken support, which, in technical terms, often becomes resistance. This concept support turns into resistance once broken is a key principle in technical analysis and could be an early signal of a potential medium to long-term trend reversal. What's critical at this point is whether the price can reclaim this broken uptrend line. If the price continues to stay below this trend line and fails to recover back above it, the probability of a deeper downward trend increases significantly. In technical analysis, trend lines are not only visual tools but also dynamic zones that indicate where buyers become active. Dropping below this line reveals that buyers have lost control and sellers are now in charge. Trend lines also function as liquidity zones. When a long-standing upward trend line is broken, it's quite natural for the price to revisit and test that area. This process is referred to as a retest in technical analysis. During a retest, the price pulls back to the broken trend line and either gets rejected, confirming resistance, or reclaims the level, signaling that buyers are stepping back in. In the current case, the price remains below this trend line and has not been able to recover above it, suggesting continued selling pressure in the market. In scenarios like this, volume data plays a crucial role in confirming the validity of the break. If volume significantly increased during the break, it supports the idea that the break was strong and confirmed. Conversely, if price movement below the trendline is accompanied by low volume and weak momentum, it may indicate ongoing market indecision and lack of a clear direction. However, the general outlook points to the price failing to reclaim the trendline, suggesting that sellers have not yet capitulated and buyers remain weak. For investors, the most critical point in such situations is to refrain from rushing in and wait for a clear directional confirmation. Typically, a new trend does not begin without a proper reversal formation after a break like this. Therefore, monitoring whether the price retests the broken uptrend line is crucial. If a retest occurs and the price is rejected, it confirms the bearish move. On the other hand, if the price breaks back above with strong volume, this could signal a bull trap being avoided and the potential for a renewed upward movement. It's also important to remember that not every broken support level results in a guaranteed decline. However, failure to reclaim the level suggests that new supports must be sought at lower levels. This can trigger a series of new support resistance shifts and amplify the effects of the trend break. As such, investors should view long-term trend breaks not just as price moving lower, but as a possible reconfiguration of the entire market structure. One of the most notable developments in the current technical outlook of the market is the emerging downtrend structure forming on the RSI indicator. RSI is a momentum oscillator that measures the relative strength of buying and selling pressures in the market. In this respect, it not only reflects the direction of price movement, but also reveals the strength behind that movement. Therefore, trends forming on the RSI can offer important insights even when interpreted independently from the price chart. When examining the current RSI data, a clearly downward sloping pattern is evident. This declining structure indicates that RSI values have been consistently forming lower highs and lower lows over time. Such a formation reflects that investors are showing decreasing buying interest and that momentum is weakening. Especially if this declining pattern has been continuing for a while, it suggests that the market is approaching an oversold zone and that a potential reversal may be forming. What's critical here is where the RSI downtrend began and how many times it has been tested. If this line has been tested several times and the price is reversed each time, then the trend line becomes more reliable. In technical analysis, trend lines with multiple touches are given more weight by traders, and their breakouts often lead to larger price moves. Currently, the descending structure on the RSI has become a strong technical resistance with multiple touches. Therefore, breaking this line could trigger a sharp and sudden price increase not only on the RSI but also on the price chart. Moreover, when a downtrend on the RSI is broken, it typically has a corresponding effect on the price chart. For instance, if the RSI breaks upward while the price approaches a key resistance zone, this provides a dual confirmation. Such simultaneous formations show that both momentum and price are beginning to move in the same direction, and these signals are generally among the most reliable times to initiate a position. Although this range is often referred to as a neutral zone, in a downtrend structure, breaking through these levels carries significant meaning. If the RSI breaks above the 50 level and simultaneously breaks the descending trend line, it indicates that investors are starting to believe the price is no longer going to fall. From this point on, buying pressure in the market is likely to increase. Especially if this is accompanied by an increase in volume on the price chart, the upward movement is expected to strengthen further. Once RSI breaks this trend, the price typically starts to rise. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.